the sense that we've never taken a nickel from anybody aside for our own family, right? My direct family. And we've never had to deal with that. And it sounds like, Aurora is very much the same. And
it's just different. They take shots with other people's money, whereas a family office is much more risk averse.
The only way we found ourselves buying deals are the ones that we are like super well entrenched in. And because we're so much in there, it's black and white. Like we build the same building over and over and over. We really don't change anything. So it's a mandate. It's a formula.
I'd say 99% of the deals that we've transacted on in the past 15 years have been all off market, primarily joint ventures or ground leases, with families that have owned the assets for 30 to 50.
My father and my two uncles are very much aligned in what they do, and it's a big blessing.
But we differ on just about everything. Every deal that we look at, we debate ad nauseum decisions on should we add a penthouse? Should we excavate down further so we could have double height retail? Is this neighborhood gonna happen or is it not? Should we do residential or office? But it
sounds like it's healthy conversation.
It's very healthy.
Good afternoon, and welcome to Pincus Co. Live, the weekly New York City commercial real estate broadcast. Thank you for joining us for our third program. Today, we will take a look at New York City real estate family offices, how to identify them, differentiate them from a family company, how they operate, and how to approach them. Our guests are both involved in family offices here in New York. Yaniv Cohen is involved in all aspects of the family-led company Leviathan Capital, which was launched by three brothers who started with rehabbing small buildings in New York in the late 1980s and early 1990s. Today, Leviathan is now a two-generation New York City multifamily developer and distressed investor, which is also diversified into other assets, markets, and real estate-related verticals. Our second guest is Jared Epstein, who is president and principal with Aurora Capital Associates, which develops and manages real estate assets for Bobby Carey's branch of the Carey family. The prior generation of Careys, including Bobby's father and uncles, were successful in music and video publishing, which established the funds for the family office. Jared has more than a decade of experience working with Aurora, as well as interacting with many other family-led firms. My name's Adam Pincus, founder of the 3-year-old media and data publishing company Pincus Co. Media. We publish newsletters on transactions and new development, which are populated using our proprietary data, which we offer for sale. Before we start, I'd like to let you know about our upcoming shows. We will speak with one of the city's 15 most active buyers by building number over the past 12 months. That's Sean Lefkowitz of Davian Holdings. We want to ask how he manages that, how he sources deals, how he prices them. To provide context, we have Avis Young's James Nelson, who leads the firm's Tri-State Investment Sales Group and speaks to scores of investors each week. In the following weeks, we are looking at new faces in the lending market, and later we'll take a look at retail. Now for a quick look at the numbers in terms of family offices. Insiders estimate there are anywhere from 100 to 200 family offices active in New York City real estate. But a lot depends on how you define a family office, which we'll get to later. We decided to focus on family offices since we report frequently on family real estate companies that own 500,000 square feet or more, which could often be worth $100 million. In our database, we have more than 400 firms like that, and so many of them are family offices, so we wanted to get in the weeds. There are family offices that range from billion-dollar plus firms like Michael Dell's MSD Capital and John Katzmatidis' Red Apple Group, to smaller firms like Pi Capital Partners, and our guests today, Yaniv Cohen of Leviathan and Jared Epstein of Aurora. So thanks for joining us. Yaniv, I'd like to start with you. Do you feel that there is growing interest in family offices, and why?
Yeah, and first I'd like to thank you, Adam, for having me over here and the entire Pincus team. And thank you for your great content. Really good stuff. And I was just telling you before, good content, and I love to read it, always giving us critical information, making it nice and transparent. So thank you.
Thank you.
Family offices in today's day and age, and I'm relatively young, so I don't have as much experience as Jared or anybody who's been doing this for 10, 20 plus years. But, I work very much in real estate finance. And yes, I think that now we want to partner with, obviously with an influx of capital, but a lot of people wanting to partner with seasoned investors and people who have skin in the game and execution power and all these kind of things. So I think that there's a lot of money out there, and you could get it any which way, but there is a big demand for family offices, and we've felt that over here in Queens.
And Jared, the same question, like, are you seeing greater interest in family offices?
I would say that since I started with the Carey family over at Aurora Capital, the amount of interest has just grown from outside investors that would be interested in having the opportunity to invest alongside us in transaction. It probably gets infinitely greater each year as we are more and more successful with our developments, and people are more aware of what we have accomplished. But to date, we have only done 1 or 2 deals with outside capital.
Yaniv, can you give a small description of Leviathan and why you consider it a family office as opposed to like a real estate, just a family company?
Yeah, if I'm interpreting your questioning correctly, I think ourselves, and it sounds like Jared as well, and Aurora would be considered purebred, maybe family offices, in the sense that we've never taken a nickel from anybody aside for our own family, right? My direct family, and we've never had to deal with that. And it sounds like, Aurora is very much the same. And I would define that as a family office, and I might have my own biases, but we, the fact that we make our decision tables on a, Friday evening or Saturday afternoon all together by the barbecue, that makes me feel like we're really in a family office.
And I'm not part of the family. I just work with the family. I was lucky enough to meet Bobby Carey when I was around 24 years old. I had no idea who he was or what his family was up to, except that he told me that he was looking to buy more buildings, that the family owned real estate. A few years later, we connected, and I was the first employee at Aurora. It was a name back then. We built a brand over the last 15 or so years. But the only real family member that I work with is Bobby himself. He's the one that's really in charge of the real estate division branch of the family business and family office. However, all the other, his brothers and his father are in the office as well, dealing with other things. And we've grown the company from myself, the first employee, to about 10 or 15 within the office. And then if you include all the property managers, supers, contractors, we employ probably hundreds of people.
And asking about the increase in interest in family offices, has that been impacted by the pandemic?
I would say that astute investors are aware of the difference between a firm that makes the majority of their money on fees, and it's just different. They take shots with other people's money, whereas a family office is much more risk averse, and only has to swing the bat at the best pitches. So if an investor had the opportunity to invest with a family that has a proven track record of success, it would be a real coup for them. It's just hard to get a family to go about making the ultimate decision to take capital from outsiders. And when there are downturns and economic turmoils like the financial crisis of 2009, the terrorist attack in 2001, the pandemic recently, I think that there's even a greater interest in somehow capital being able to align themselves with families that have proven success, not only in the real estate business, but for generations in a multitude of businesses. Like the family that I'm lucky enough to be with, they're very entrepreneurial and have an incredible track record and a pristine reputation.
So one thing I wanted to know is, like, when you're in the deal mode, when deals come to you, how is that different, the way that you make a decision on them? How is that different than if you were in another type? I mean, it's sort of hard, Yanni, really hard for you. I don't know if you can step outside of your experience, but how do you imagine it's different for you all?
Yeah, and I share very much, my family and I share very much the same testament. It sounds like we're very similar to Aurora over here, but I think it's a very different equation, very, very different equation. And sort of what Jared alluded to for a second over there is that, right, and I think that the line is that we're not making money moving money. We are making money through the asset. So we nurture our deals very carefully. We're very much hands-on. We're very much involved. We're not, buying something and I don't want to use the term on to the next one, but buying something and our focus is somewhere else. We make sure that that delivers a return on our investment. And I think that because of the amount of capital in the industry today, it's not the same testament across the board, maybe.
So how do you win deals in a sense? Like if there are people who have that can put higher leverage, they can do all kinds of stuff. Can't they land deals? Like how do you get it and not them?
That's a great question.
That's a great question.
Oh, my experience has been, sorry, someone just calling me.
Nice picture.
And send to voicemail. Sorry about that. Okay. So what I was going to say is every deal that's on the market, of course, comes across our desk and we see them all. It's hard to compete on those transactions primarily because everyone is chasing them. And like Yaniv had just said, there are funds and deal promoters that need to put out capital. They don't have any chance of making a return and making money unless they put out the money. It's very different for Aurora and Leviathan. When the majority, I'd say 99% of the deals that we've transacted on in the past 15 years have been all off market, primarily joint ventures or ground leases with families that have owned the assets for 30 to 50 years. And the reason that we were able to win the opportunity to do the joint venture or the ground lease or even a straight up purchase, which is more rare because it's just so hard to buy things off market, is due to the fact that we develop incredible relationships with the other party in the transaction. Some of them take, the most recent transaction that we're doing, it was something that we had worked on for nearly 15 years. And you develop, it's kind of like bringing the other party into the family in a sense. And you're surrounding them with love and kindness and showing them your portfolio and walking them through each and every development you've done so they understand the experience that you have, the attention to detail that you put forth into every single project, how much you care about the property, how much you care about the neighborhood, how much you care about the city in which you're operating. And that really separates us from others on those types of transactions.
In a sense, does that mean that they could theoretically have made more money going with someone else, but so they're more comfortable?
Right. So on certain times if they were to outright sell the property, that might be the case coming out of the gate, but they're able to see, and we can show them with mathematics, how if they align themselves with us and we are able to perform to the levels that we have previously performed, literally with the half that they sold or the ground lease that they structured, they end up doing infinitely better by staying in the deal with us instead of selling the property outright.
And what I wanted to ask, Yaniv, when in terms of like deal flow or processing deals, how do you process them? What's your way of, do you have a couple family members that get together and like discuss them, or one person does one kind of asset?
Yeah, it's a good question. And I think it's sort of is a derivative of what you were talking about earlier when you talk about how do you win deals. And Yeah, I think reputation is a big part of winning deals, right? A lot of people have all cash offers. A lot of people, we've won deals through certainty of execution and reputation, and only that. And we've gotten discounts on buildings through that. So the people that we work with, that we've transacted with, that know us in the industry, that is what I would use as the main word on how we win deals, or two words, is competitive edge, right? So, and this sort of trickles into the second part. It's about process, right? So when we're working on deals, we're thinking about, okay, what are we best at? What is our competitive edge? Because there's a lot of money out over there, and there are a lot of people throwing it around. How are we really gonna get a good grip of what we're doing and make sure that execution is going to be obviously not flawless, but as well as can be done. So the process is that we know our markets very well. We have 4 or 5 different buckets that we're very, very well immersed in, and we know it like the back of our hand. So in terms of process, everybody's on the same page. Deal comes in, it's in our world. We understand what it is. We run the analysis. We put a figure on it. When it comes to the point that we could actually execute on, and sometimes it takes 6 months to get a call back and say, you know what, your offer is actually somewhat in the realm. Let's make it work, right? We get those phone calls a lot because people come, sign a contract, play games. We're taking it at a level where we know we're going to take this down, and the process internally pretty seamless. I mean, obviously we need a consensus, or we need everybody on board, but we're all in the same mindset, and we're very fortunate as a family to be like that, to all have the same competitive edge, the same vision, the same logistics and values to get there.
What are the 4 buckets that you guys do?
Yeah, sure. So we do ground up development all across New York. We do free market, we do affordable, we do really anything in the construction world only in New York. We buy distressed assets also only in New York. And then we buy triple net deals across the country. So Walgreens, CVS, things of the sort. And then lastly are actually government leased assets. So a police station we just closed on in Pennsylvania. Yeah, interesting asset, Jared. I see your face over there. Like, how'd you get there? Again, we believe in this, right? Like thematic investing, we believe in it. We say we believe this has long-term growth, long-term value. And we really, really immerse into the industry, and we get to know everybody.
I'm going to take a question that someone's put in. Why do you think family offices don't raise money and utilize it for their own benefit? And I think you were talking, maybe someday you will.
Aurora, it's always just been, I would say, Bobby's fear of losing someone else's capital. He takes so much pride in himself and his reputation and his relationships. And it's one thing to risk your own capital, but to put anyone else's capital at risk is a risk he hasn't taken too many times in his life or career at this point. And then there's the other fact that once you do go down that route, it's hard to distinguish whether you're a family office any longer or you're a company that's seeking outside investment. And where do how do you pick and choose the deal flow? What opportunity goes to the family? What opportunity goes to an investor? Which investor? We don't have a fund. We've only done 2 or 3 deals in total with outside capital.
How were those different? Like, did something change in the way that the deal happened?
The few situations. So one situation was outside of New York, all the way on the other coast, the West Coast. Someone that we're we have a great relationship. It's like a let's call it a programmatic JV, but we have only done a few, and they're in Berkeley, California, on the street called 4th Street, which is similar to like a neighborhood high street out in Berkeley, California. So that was somewhat our wheelhouse, but needed to be operated by someone with boots on the ground there. So we put up a portion of the capital, brought in an LP, and had our partner on the ground there running the opportunity from California. The most recent transaction where we brought in outside capital was we have a friend that is another family office, very wealthy, affluent family that was looking to make a bet on retail in Manhattan coming back in the depths of the despair during COVID. And we had looked at a plethora of transactions, including the Vornado retail portfolio, some of it which has recently traded in like the last 6 months. I think a couple pieces in Soho, a few on Madison. We had looked at all of that, but it just didn't pencil for us. We had looked at other things in Soho and on Madison Avenue. And then actually Adam Spies brought to market 530 Fifth Avenue, the retail condo at the base of 530 Fifth Avenue, which has a lot of size. Does not have, we didn't believe it had a lot of risk because you were buying it going in at like a 5.3 cap. And if you believe that the rents in place, which are pretty much at today's market, had room to grow over the next 3 to 8 years, there could be a significant upside. So on that deal, I would say we were helping out a friend place a bet with someone that he trusted incredibly, but my partner Bobby Carey and our firm, that we would be able to execute if any of these retail spaces ended up coming available, and when the roll on the leases occurred, that we'd be able to fill them as good or better than anyone. So that's a bet that we helped make on behalf of someone else.
And Yaniv, to ask about on a very practical level, like how do you handle if there are disputes on how to go forward, either when there's a problem or on a particular project?
Okay, you're talking about internally or just generally?
Internally, yeah. Like how do you?
Internally, okay. Sorry, I just want to understand. Right now, like I spoke a little bit before, my family, we're still a very young family in it. I'm the eldest son in the entire family, the eldest person inside of the family business in the industry, and I'm 27. So I think it speaks that we're a young family office. We don't really have any of that. My father and my two uncles are very much aligned in what they do, and it's a big blessing because talking about family offices and dealing with other people in terms picking up those phone calls. It's something that we just really didn't want it to take away from our business. Obviously people say, you have difference of opinions, different mindsets, but again, our vision, our mandates, our benchmarks, the logistics, everything is all more or less in place. So we don't really have that difficulty, I guess. Everybody's on the same page, I guess, fortunately.
I have a very different situation at Aurora Capital. I love Bobby Carey to death. He's probably the most brilliant young man I know and will ever know, I think. Not college educated. He learned by working with his father when they were taking a company public and another company private, and divesting of companies, and his uncle that was in real estate. He just learned. They described him as like a sponge. He literally just soaked it all up. So I like to say that he got a double Harvard MBA between 18 and 22 without having to be in Boston, being in New York City. But we differ on just about everything. Every deal that we look at, we debate ad nauseum decisions on should we add a penthouse? Should we excavate down further so we could have double height retail? Is this neighborhood gonna happen or is it not? Should we do residential or office? But it
sounds like it's healthy conversation.
It's very healthy at the end of the day. Debates are interesting and you learn from them. And I learn from him every day. I hope he learns from me at times. And at the end of the day, we've had a pretty good run, and I hope we're able to continue it. But at the end of the day, as much as I may push, I do respect and understand that it's his family's money. He's the boss. I might be a partner, but I'm the second in command, not the CEO.
And so, Yaniv, do you have those kinds of conversations where it's actually just like, it's not people, I want to kill you, but just,
No,
hey, I think we're growing here, and let's.
I think, and it's actually, Jared, I'd love to touch with you after on this, but we operate as a mandate. So it's like if something comes in our box, we execute, and we try very hard to stay in there because that sort of draws our lines. When I don't know, just being spread thin between all these asset classes, competing with all these, from mom and pop to institutional level people. The only way we found ourselves buying deals are the ones that we are like super well entrenched in. And because we're so much in there, it's black and white. Like we build the same building over and over and over. We really don't change anything. So it's a mandate. It's a formula. We're not much room for opinion. It's the same finishes, same quality, same everything across the board. And it goes across all different buckets that we have. So it's a little bit different, but I could understand my brother and I at Yaniv Cohen, we do a lot of the family office back and forth. We actually, because we're a family office, we talk about, it's about increasing, what we have going on in terms of volume as well, which is very hard when we're competing with funds. But we always think about what I said before, a competitive advantage, right? So how are we going to be the best in what we do so we could win those deals? Because if we're a second, we won't win them. First place will always win it. So we're always thinking about how to be best. And it always comes down to a competitive advantage. And I remember I was like 17, 18 years old, and I was listening to one of Charlie Munger and, partner of Warren Buffett's speeches. And he said, we look into simple businesses that have a competitive advantage and we invest in them. And the competitive advantage is all of it. So, right now we're expanding into a core retail concept called the share fund, right? And this is, a competitive advantage in the sense that retailers come in, spend less money on rent and get more foot traffic, right? So that's like something that we have very heavy conviction on, and people in venture capital firms come up to us and they say, oh, you're a family office. We believe in your execution. You have buildings that we could back this up with, all of the above. But we look at them and we say, this is something we have conviction in. It's always a roller coaster of a ride. You got, people are going to call when things are bad. They're not going to call when things are good. It's not something that we want to be dealing with. We have conviction in what we want to do with this competitive advantage. And that's how we win deals. And that's how we excel in what we do. So what we do, we don't do one or two projects. I mean, Adam, you track Acris Records, right? We're doing a lot of projects in it because we have that advantage for now. A lot of good competition out there, though.
Yeah. And Jared, I wanted to ask about, we talked the other day, and you're saying that there's a possibility that you would look, or not you, but that the company would be looking into other ways into possibly raising money or funds or something like that. What are your thoughts on that?
Yeah, we talk about, I might be the one pushing these things at times, but we talk about expanding our reach, or broadening our horizons, or I like to say spreading our wings and flying, because I believe so much in Bobby's mind and he has the capital and he has a great network, and then I have a great network, and I think I have a little bit of a vision into trends and things that are going to happen. So we look at a plethora of different businesses. So we've looked at many different venture capital opportunities across the board of technology and retail experiences, health and wellness ideas, food and beverage. And now most recently, because of the execution of 530 Fifth Avenue, we started thinking about the potential of either going further into exploring raising capital on certain ideas that we have, certain properties that we have our eye on or under contract, or potentially raising a fund and going about it that way. We've even talked about doing a debt fund. Bobby had a company, and still does, called Eastern Capital, which was a hard money lender. And the idea of going into the debt finance business, because of our relationships with other developers and our keen understanding of the various markets and use categories, like what properties would be valued at, how much construction costs are, what the real pro forma should be or looks like. So underwriting would be pretty simple. And we have a relationship with tons of banks. So I could
What
doing
would be
that.
the time frame? You think this is in next year or in 10 years? Or?
These are things that we've talked about, over a multiple amount of years. But I feel like we're getting closer to making a shift to creating more of a business than just having a private family office that's making investments. I think we've built a great track record, have a great brand, and have a very strong internal team when it comes to analysis and development and leasing. So I think the time is sooner than it's ever been. We've even talked about the metaverse and NFTs and tokenization of real estate. You have to have your eyes open and be aware of everything that's going on around you, because the world is changing at the most rapid pace in civilization. The digital economy is here. Digitization of all different assets is happening, and I want to be a part of it. And I hope.
Adam, just to jump on Jared's back over.
Just briefly, because we're about to wrap up.
Yeah, both of us would be able to say that in family offices, big decisions take a long time. So give a time horizon is tough when it comes to family offices.
So I would like to thank you, Yaniv and Jared, for participating, and for everyone that tuned in. This concludes the broadcast. We're going to publish this on our YouTube channel, and it'll include a 1-minute highlight reel of some of the comments. And so I want to thank everyone for joining us, and have a great afternoon.
Thank you, Adam, for having a great meeting.
Pleasure.
To a new.
Thank you.